Going. There we go. Recording going, so we don't leave anyone out if they can't make it live. So all that being said, Daniel, I will turn it over to you. If you would please do like just maybe a quick 60 to 90 second introduction for those who haven't met you yet, and then we can dig in. Oh, you're muted.
Hey guys, what's going on? I'm Daniel. I like to learn things and understand how they work and then teach them to other people so that they can understand how they work, and then we can all make money together at the end.
Nice.
You said 30 to 60. So
that was like the perfect synopsis. Yeah.
I've learned from CCA to condense things like the 6-word update and stuff. So I just, look, how can I say things in the least amount of words possible? Because I tend to ramble, and you'll get to experience that, I'm sure, in the next hour and a half or however long we're here. Yeah. So to all jokes aside, me and Brandon met in a great mastermind, and we've been kind of head down, and I can speak for myself. So I've been head down in DeFi for a year. I've worked on the front end of some projects, managing communities. I've done some advising for some projects, and now I've launched Forge Finance. I'll show you guys a little bit more about that later and what's going on. And those of you who are in Brandon's mastermind will get an opportunity at the end, and we'll talk more about that. But the reason we're here today, I think, is let me go to gallery view here so I can see everybody. Just raise your hand, do the little raise your hand thing, or raise your hand if you're on video, if like you are already in DeFi. So I kind of get an understanding, like, are you in the decentralized finance realm and you're just learning more, or we have like brand new people? Because I have to understand kind of like what language to use, because you guys are going to be like, what the fuck is a DEX? Like, what is this? What is that? Like, you're going to have no clue what I'm saying. So I'm going to try to use like real world terms to
and Daniel, if we need to, I can translate in the chat. If you drop words that I anticipate someone might not yet know, then I'll just do a quick little summary in the chat box.
Okay, cool. So it's my understanding today we're going to talk about kind of 3 things mostly, which is making money during a bear market or a down market or a sideways market, whatever you want to call it. The yield farming process and how that relates to what your macro belief is and to your macro beliefs. And we'll talk a little bit about NFTs and how they play a role in crypto and stuff like that. Is that kind of why everybody is here, to get kind of general information, education about that stuff? Okay, cool. We're on the same page. I don't want to just talk for an hour and nobody gets anything that they wanted to get out of it. So, okay. So I guess let me get a couple tabs open here so I can share. Can you make me the host so I can, or give me?
Yeah, you should be able to share screen.
Okay.
If you need to be host, I can make you host, but then you'll have to admit everybody.
You cannot. Oh,
oops.
I think you're sharing your screen.
Oops.
How dare you? Okay. Cool. So, for those of you who are brand new, CoinGecko.com and CoinMarketCap.com are going to be your 2 kind of main sites that you'll look at most things on. So Brandon can post them in the chat and you guys can bookmark them. I have a folder set up here. You can see I have crypto farming, crypto stuff, NFT. It's best to just make a folder, bookmark the things so you don't go in and type them in and mess something up and end up on a scam site. So make sure you get the right link first, then bookmark it. And then I just always navigate to my sites through my bookmarks because I know it's right. When you go into Google and you're like, what was the name of that thing? And you type it in and you go to pancakeswap.financial and you connect your wallet, you can get scammed. So to protect yourself, I use the bookmark. So I wanted to share that. Anyways, talking about the macro market. So the macro market is, if you pull up one of these sites and you're looking at it, we're talking about basically the top 100 cryptocurrencies. Okay, we call them blue chip assets, more or less. And I think the market cap for the project number 100 is about 500 million. So Guardian is very close to being on the top 100. It was actually number 83 before the recent close, but because their market cap's not showing correctly on the site, it was not showing on the front page. Hopefully that will change soon. But understanding how the market works, because it's a little different than the stock market. It's open 24/7. People can buy and sell. They don't have to have any experience. You have pigeons playing against pros, right? So that's why trading can be like very difficult, because if you're just coming in, you're like, oh, I can make a bunch of money. Well, there's a bunch of other people who are probably way more equipped to trade better than you. And trading is a game where like somebody wins and somebody loses, right? What we're going to talk about today is a way that you can predictably win over time, that removes, and there's always risk, but that domesticates risk and removes risk along the way, because you're building an effective hedge to the downside by using liquidity pools and yield farming and stuff like that. So we'll break it down. I'll talk about what it is. I'll talk about how it works. But first, we need to understand the market. Okay. So the market operates on Bitcoin. Bitcoin is big brother. What Bitcoin does, the rest of the market does. If you look at these charts, they all look pretty much the same in comparison to Bitcoin, right? There's little differences, but almost everything follows Bitcoin. Okay. So the way Bitcoin works is it runs on a 210,000 block cycle. And a block on Binance is about every 3 seconds. But for Bitcoin, that equates to being about 4 years. 210,000 blocks, about 4 years. Okay. The reason it's like that is because at the end of every 210,000 blocks, you have a Bitcoin halving event. Okay. So right now, there is not a limited, there's not a set supply, limited supply for Bitcoin, because there's still Bitcoin that's able to be mined. So miners are mining Bitcoin every day. They got computers, you saw all the stuff in the news. So there's people that are mining Bitcoin, and that the amount of Bitcoin that's able to be mined by the miners gets cut in half every 4 years, right? So what that do, it creates a supply shock every time. And that's when we generally trigger and start to see a bull run commence, or the market start to really take off. Does that make sense to everybody? Because there's less supply, there's a less amount of Bitcoin that can ever be acquired. People are like, oh man, I got to get more. So the sentiment kind of changes, and it's kind of usually, if you look at the past halving events and the charts, you can see the similarities in that. So the next Bitcoin halving, or the last one that will ever happen, is in 2044. So in about 20 years, all of the Bitcoin that can be mined will have been mined, and you can only buy it. So if we're thinking, and if you're in crypto, I really hope you're thinking long time preferences. As an investor, you should be looking at 5-10 year plans, not like what you walk into in the DeFi chats. I'll let you guys figure that out for yourself, but it's a nightmare in comparison, right? So if we're thinking like 10 years, 20-year timelines, and we know that the market on average tends to go up and right over time. It's like the real estate market. I'll use an analogy. People invest in real estate because it's going up, an average of 15% over time, right? An average of 15% a year over time. So the crypto market is relatively the same. Okay, it's proven itself to go up and right over time, right? This is the full-time chart for Bitcoin. So you have your ups and your downs, and they seem like really like this is a full year just right here of down, right? And then another year of, kind of sideways movement, 2 years of sideways movement, and then another big pump, right? You had 2014, 4 years, pump, Bitcoin halving event, okay? Dump. This one took about 3 years until the next one, right? This is like 2018 right here to 2021. This was the end of 2020 and the beginning of 2021. So it was about 3 years. Okay. So it's very likely that we see Bitcoin in the market, and this is all speculation. Okay. This is my opinion. This is based off of what I know. Keep that in mind. You could form your own opinions. Everything that I say today is based off of my beliefs and what I know. Okay. It's not necessarily the truth, but, it's very possible that we're sitting kind of on a glass floor and that we could see more downside for Bitcoin, or we could see it move sideways for like a year or two, right? The next Bitcoin halving event is May 3rd, 2024. So that's just under 2 years from right now. So if all that means if we have sideways movement for even like a year, anybody who's buying these things is not going to be making any money within that year, right? Maybe a little bit of fluctuations here and there, but nobody's accumulating more assets over that time, right? Their dollar value is changing from the assets they have, probably not very much, but nobody's really making any money and nobody's really making any assets. So how do you position yourself in a way where you can accumulate assets or more of your macro belief, and we'll talk about that in a sec, for free? Sounds too good to be true. Most people are, that's what most people think, and that's why kind of most people walk away. But because these percentages that you can get in yield farming are silly. If you're taking it from a traditional finance lens, you're like, this is a scam. There's no way, right? Until you understand how it works and how it can work, like fundamentally, you're like, I don't really believe this. I'm not putting my money in this. So I'm going to explain to you today. I'm going to try not to go too deep into it, but I'm going to explain to you today how yield farming and decentralized exchanges and that kind of stuff works and how they can give out these kinds of rewards. So you have to explain the relationship of how things fit together. So we'll talk about that in a second. I wanted to come back because I said something called the macro belief. Okay. The macro belief is an important thing in my opinion. I'm biased because I'm from the wolf den, but the macro belief is an important thing because it's kind of like what you determine is your store of value, right? Some people's macro beliefs is US dollars. Most people's is because they use US dollars to buy things in real life. Some people hold their value in gold. Some people hold their value in silver. Some people hold their value in Bitcoin. Some people hold their value in gold or Ford or whatever, right? It is your job to determine what your macro belief is. I don't want to hold US dollars personally because I don't think the US dollar is going very well. So I would prefer to hold guard as my macro belief now, but it was Bitcoin. And I would say start with Bitcoin. If you're going to start with anything in crypto, start with Bitcoin because it's the most proven. There's the least amount of risk. So you have to determine your risk tolerance. But the macro belief is, what do I believe in long term is going to help me preserve the value of my money, or at least or multiply it and let it grow, right? So if your goal is if your macro belief is Bitcoin, then your goal is always going to be to accumulate more Bitcoin. So how can you do that for free? I'll show you the strategy right now. Okay, so this is NightSwap. NightSwap is a decentralized exchange. So let's talk about what a DEX is. DEX is decentralized exchange. If you think about like a centralized exchange or the stock market, how they have an order book and you have to have a matching buyer and seller for the transaction to go through. Liquidity pools are basically automated market makers. So there's no need to have a seller on the other side for somebody to buy because the assets are sitting in a pool together and you can transact in and out of that pool whenever you want, as long as there's liquidity. Is everybody following along? I know this is where it gets a little weedy. So, okay. So basically in a centralized exchange, there is a centralized source of liquidity, right? They have a large source of liquidity for people to transact in and out of. On a decentralized exchange, since it works on liquidity pools, somebody has to provide the liquidity for those pools in order for people to transact in and out of them, right? So they say, hey, instead of us providing the liquidity, centralized liquidity, we're going to incentivize the people who use our platform to provide liquidity for us. So what you're doing is you're taking your assets and you're lending them to the platform, and the platform is giving you a token that has value back in return. So if you provide liquidity, like let's say I provided liquidity in Night BNB, now people can trade between Night and BNB as assets because there's liquidity there. Because you're allowing that to happen on our platform and you're lending us your assets, we'll give you this asset in return. Okay. Now that might seem like really cool, but then you're like, well, wouldn't people just sell this token into the ground then if everybody's getting this asset, right? And this is how the functionality of a DEX and working with other projects is super valuable because they say, here's our native token, which is night, right? It's 35 cents right now. So here's our native token. We're going to give you a bunch of them a day. You can see mine counting up here. If you don't want to sell our token for dollars or for your macro belief, here's a bunch of other things you can do with it. Okay, you can put it in here and earn more night. You can put it in here and earn Forge for free. You can put it in here and earn Wolfies for free. You can put it in here and earn Guard for free, right? So there's a bunch of things that you can do with that native token. So they remove selling pressure by allowing you to use it as a powerful asset to yield other assets, which then you can sell for your macro belief. Does that make sense to everybody? Probably not. I know you're going to shake your heads, but a lot of people are going to be like, that went right over my head. So
for everyone already in the mastermind, this will at least be familiar, if not review, which is perfect.
Okay, so we'll walk through the process. So if you set up a guard base case, which is what I believe Brandon is teaching most people, right?
Almost everyone in the mastermind has a guard BUSD farm as their primary farm. Yeah.
That is so hot. I'm so proud of all of you. That will do well for you over time. Methinks. No crystal ball, but so if you have a base case, which is it's providing liquidity for guard BUSD, it earns you night. Okay, you can take that night and you take it, it's earning you, let's use Forge as an example, because the APR on guard is just decimated because of how amazingly it's done in price action. So for Forge, you're earning 116% APY. Okay, or if you use the APR, it's more reasonable for people. So 77% APR, and you're earning that in night tokens. Okay, then you take that night and you go and put it in the pool to earn you more night at a 65% APR. So now you're getting compounding on compounding on the same asset, right? Then you take the night that you earn from this pool, you harvest it, and you drop it into one of these other rates. Like I'm earning Forge for free. So now you have a 3-step compounding process where your first thing earns you night, the next thing earns you more night, the next thing earns you a different asset. And then you can take that asset and you can just accumulate them if you believe in them, or you can sell them back for the thing that you bought your initial asset with in the first place, which is BNB. So once you have that BNB, you can go buy whatever your macro belief is, right? Let's say you're making $50 a day. Let's do some math. Pull up a calculator here. Say you're making $50 a day from this farming and raiding strategy of BNB. And you use that, let's say your macro belief is Bitcoin. Okay. And you go and you sell the rated asset for BNB, and you use that $50 of BNB and you buy Bitcoin every day. So times 365. So you've now bought $18,000 worth of Bitcoin by the end of the year. You've just accumulated $18,000 worth of Bitcoin. And then let's say you do this for 2 years, the example we used earlier, right? Because of the Bitcoin halving event, when the market cycle returns, you now are sitting on $36,000 of Bitcoin, which is about 1 Bitcoin, right? Then let's say the next bull run happens and we see a similar jump as far as historical data. We see Bitcoin go to 100,000. That's just under like a 3x. We'll call it like a 2.6x. You've now made $70,000 in 2 years just by accumulating $50 worth of Bitcoin every day for free. And you still have, let's say you started with, I don't know, let's say you started with 10 grand in night swap. You still have all of that night plus the night that you've accumulated plus the appreciation of that night. So if night goes from 30 cents to $1, you had 10, so that's another 30,000. So you're looking at like $120,000 in 2 years for free after your initial investment. Does that make sense to everybody? I don't like using that for free or like money printer words, but like it's fucking awesome. Like it really is. Like that's basically what it is. It's basically a money printer.
We also go over in the mastermind how if you leave the primary farm alone, you can accumulate these additional assets and still sell the yield of those assets for profit while not messing with your primary farm / golden goose.
Correct. Exactly. Because we don't want to, if your macro belief is guard, then you don't want to sell guard. because a micro strategy that's diametrically opposed to what your macro belief is, right? There's a misalignment there. If you're trying to accumulate more guard, but you're selling it, like that doesn't make any sense, right? Same thing with Bitcoin. If you're trying to accumulate more Bitcoin, but then you're selling it on the other end or in a different trade, that doesn't make any sense. It's probably not your macro belief. So it starts with knowing what your macro belief is so you can back into the appropriate strategy, right? But I think if you look at, let's look at this really quick. If you look at the return on the auto compounders where it just compounds for you, like Forge is making 0.2% a day. It's like 10 times better than your bank in a day. No, it's 20 times better than your bank, probably more. And so like the value of these auto compounders is huge. And this is just the yield. Like what a lot of people kind of miss out on like where the exponential gains are is the price action from the asset that you're involved in. Like if Knight, let's try to be conservative, but I get excited. If Knight does anything close to what some of these other decentralized exchanges have done in market cap, because its market cap is like 9.4 million. It's like $10 million, like an absolute baby. Guard's market cap went up to almost $1 billion. So this is super small. If it does anything like, I don't know, let's just compare it to Pancake Swap right now. Pancake Swap is way down during this, just like everything else really, but and this isn't the best comparison because it's going to be the largest market cap, but you know, their market cap is 722 million. So that's a 70x. Like if Knight even went to $100 million market cap and it's at 10 right now, that means the price would 10x from where it is right now, which would put it at $3. That means if you were making $50 a day here in Knight, you were actually making $150 a day that entire time, retroactivated, right? Because you've just been accumulating this, and then if it eventually does go up, like all of that money that you've made per day has then multiplied by the same. That makes sense to everybody? Let me explain it using an analogy. When I started farming Guard, when it first launched, I was making $15 a day of Guard. And I was like, this is dumb. Right? I was like, this is not what I was expecting it to be, right?
What was the price of Guard at the time?
You don't want to know. It's really cheap. And that $15 a day of Guard that I accumulated, I was making about 2,000 Guard tokens a day. And Guard is now like, what, I don't know, $7. So I was making that. Technically back then, just by taking those actions, I was making $15,000 a day. I had no clue because I didn't know what was going to happen with the appreciation of the asset. But it just goes to show that if you allow time and randomness and you get asset appreciation, you can win really, really, really fucking big in this space, bigger than anywhere else you can. Promise you that. The game is exponential. So in an exponential game, you just have to learn how to not lose. How do I stop myself from losing and making stupid decisions? That's the best way to win in a game where you have the asymmetry so skewed to the upside. So now we know how market cycles work. We know how a DEX works. Does everybody understand how that kind of passive asset accumulation works? And like how, if you kind of play in a bear market, if your goal, this is to wrap it up here, in a bear market, if your focus is on accumulating assets, whenever the next market cycle happens, everything gets dragged up by Bitcoin going up. So everything will appreciate if it's tied to the market. Guard is not, but Guard is just a fucking titan of its own. Everything that's attached to the market or a volatile asset, those native assets get pulled up. So BNB will go up to maybe like 800 or 1,000 or something. And that means every project that's built on that blockchain will increase in value with it, right? So if you're just accumulating a bunch of assets in a bear market and then they all explode in a bull run, you make a lot of money compared to the person who just bought Bitcoin right now because they're like, oh, it's a really good price. I'm going to buy the dip, right? They sat there and then they made a 2.5x, maybe, right? You're looking at making 100x or more. Like I made 100,000% in 1 year, which is unheard of, not typical results. Okay.
Yeah,
But
I think people thought you were joking when you posted that in the group, but I was like,
no,
nope, it's real. It's just not typical.
yeah, it's very real. I mean, it's very real. I will tell you, it's real. It's not fake. It's not fake internet money. It actually turns into real money, I promise. Um, but yeah, so just understanding that asset accumulation is the most important way to think. How can I get more assets? Not like, what is the dollar value of my assets? If you think of dollar values, you're going to get wrecked. The emotional volatility, like if you're not prepared for it and you come from traditional finance, you're going to be you're going to be awake at night. You're going to be stressed out. Like you're going to grow gray hairs. I swear to God, like you have to really like understand how to look at things and have conviction. And that's going to be hard, especially if you're just coming in. But understand, you might feel like you're late, but you're actually very, very early. The crypto market as a whole hasn't even crossed like the chasm of diffusion of innovations and really like been adopted. Once regulation comes, that will likely a ton of money will move into the market because it's extremely lucrative, and that will balance things out and make it less volatile because there's more money. It takes more money to swing things, right? So, okay, next topic. Sorry, did I ramble?
No, that was perfect, man. I know like Heidi also commented, it's nice to hear it explained in a different manner because your perspective on it, it's the same big idea, but you touched on a lot of key points that I think a lot of people are gonna grab hold of.
Yeah, that's something that I'm trying to take a page from Nick's book is taking very complex things and simplifying them and having them be understandable and palatable for like people that may not have a lot of experience. Because that is a superpower of his. Like when I learned all of this shit, like I was in it in Guardian from day one and the Wolf Den and all this, and like nobody helped me with anything. Like I made all the mistakes myself. Like it was the Wild West. But it was probably like, it's a fire hose to the face of information, but it catalyzed and sped up my knowledge and yeah, whatever. Anyways, so we talked about making money during a bear market. Does anybody have any questions about what we talked about there? I did want to open up like after each section, like if somebody has.
Yeah, Derek just wants to know, how do you learn all this? Is there a book?
No, you lose money, you make money, you figure it out. You have a good mentor, Brandon. I teach people. I just don't tell anybody that I teach people because I don't want to teach more people.
The recluse in his cave. Get off my lawn.
Yeah, I mean, I enjoy teaching people who want to learn, but like that's, since you guys are here, I'm happy to teach you guys. Like I don't want you guys to feel like this is doing me a disservice or anything. Like I enjoy talking about this stuff to people who are genuinely interested and want some answers to questions that they may have. So,
can I ask one question? I'm sorry.
Yeah, go ahead, Mick.
All else being equal, would you concentrate or would you try to concentrate more on assets that are deflationary as opposed to inflationary?
By general like rule of economics, like obviously deflationary.
Well, in this space, for example, I mean, one of the things I think Brandon and I, when I first spoke to Brandon, that was one of the questions that I kind of had. Is there a way to kind of find projects where, I had mentioned to him when I first got involved in it, I got into cake. And then I very soon realized cake inherently possibly can lose its value because they're producing so much cake out there. So which made me think, well, I wonder if there's, the same type of ecosystems and tokens where you can get involved where maybe they're not being inflated as much, maybe not as many are being created, maybe the burn rate is higher, so on and so forth. Do you guys ever pay attention to those kind of things, or is that something maybe I'm getting a little too technical?
I think you're getting a little granular, but I think it's because you have a unique situation where the first thing you invested in was a DEX token.
Okay.
And like, if you don't understand, like, because a DEX emits, I think NightSwap emits like 224,000 tokens a day, mints new tokens, right? So people are like, how will this thing ever go up if the supply just keeps going up, right? They have deflationary measures built in. And if you understand how the APRs and the APYs work, you'll understand that as more people come in and the price goes up, the higher the APY and the APRs go for all of those farms, which brings a flood of people in, right? If you look at PancakeSwap, you want to know how much money these people made who got in early. It's pretty gross. Like if you just staked, this is not the right chart to look at. You got to look at it on PancakeSwap, I think, because this is a good thing to understand. Like, this is why I'm super bullish on Night. A lot of people come to me with that argument. They're like, well, it's not a limited supply, right? They're just minting new tokens. Like, how can this ever become more valuable? Well, I understand the interaction and how the numbers and everything fits together. And I understand that other people may not. So, but when PancakeSwap was launched, we're looking at what, 60 cents, somewhere around there. And it stayed there for a good while. Okay. And if you had just accumulated, like, I don't know, I could be making, if I paired my Night farms back up, I could be making like 2,000 to 5,000 Night tokens a day, right? And if I just accumulated Night for 6 months, which it's been what? It's been about 6, maybe a little bit more. And then it pumped from $1 to, like, this is unfair. Let's go to like here, like even $10, right? You make a ton of money right here. And if it goes anywhere like near where Pancake hit in the bull run, which is $40, like these people are all millionaires right here. If they didn't sell their asset off and they just used it to accumulate, right? And for most projects, you would have to just hold this here. You couldn't do anything with your tokens. But with Pancake or with Night in this example, you can use it to yield other assets for free while you hold on to it, right? And so it's really kind of dependent on what you're trying to accomplish and what your solvable problem is and what your risk tolerance is. So whenever somebody asks me, like, do you think this or that? I say, I don't know. Depends.
And then Cake didn't have the same setup as Night does, you're saying, where you weren't able to use the Cake to yield different assets?
I honestly, I don't know. I've never looked at Pancake staking before, but other dexes like ApeSwap, BabySwap, you can do that with other dexes, but they don't have deflationary measures set up. NightSwap has, if you look in their docs, I'll show you really quick because I know where it is. It won't take long. If you look in their docs, they're actually collecting a large amount of Night. So of every 10 Night tokens that are sent out or minted and sent out, they are collecting 0.9 of every 10 right here, dev wallet. So they have a metric shit ton of Night tokens sitting in a dev wallet. And when they see that the supply is getting too large, they burn them to bring the supply back into check. Nice. Does that make sense?
Yep.
So it says Night sent to dev wallet will be burned once deflationary measures are needed to control the overall token amount. So they have control, they have price support using their own trading fees. They have a few things that make them stand out fundamentally against other dexes that I strongly believe in. And that's why I'm so heavily involved in Night. And if Night goes up, everything in the ecosystem wins exponentially, because if the yield that your asset like Guard or Forge or whatever, if the asset that you're yielding, which is Night, if that goes up in value, these APRs start to skyrocket, right? And then everything looks super attractive. And then you get a bunch of new people coming in because everybody's making a bunch of money, right? So there's this time in a DEX's life where it just like explodes in most of their lifespans. If you look at them, this is just not the right chart, but yeah. So to go back to your question, that was a long-winded response. I generally would invest in things that have a limited supply because they have a larger, I would invest early in things that have a limited supply because they have a larger potential for price action. right?
Okay.
Guardian's done 1,000x. Knight has gone down in value, but I'm still heavily in profit on Knight, even from buying the top because of all the yield, right? That's the hedge. Like the yield that you're making is a hedge to the downside. So think of it like this. If you, let's just share this screen.
So if hypothetically, if you're making 120% a year, but it's gone down 60%, you're still kind of up 60
Yes,
in a way.
more or less. Yeah. So I'm just going to write it out. Like if you put, God damn it. Sorry guys. I curse a lot. I hope that doesn't bother anybody. It's just who I am. If you put, good, I like it. If you put like $10,000 into Knight at $1 and it's at 50 cents, technically you would, or at 50 cents, technically you'd be down $5,000, right? But let's say you're making, and let's say that it's at 50 cents after 3 months. Okay. Let's say you're making, see at 10,000, you'd be making like, I don't know, maybe $100 a day or something. Making $100 a day. So after 3 months, that's 90 days. That's what, 9,000? Yeah. So you'd have 9,000 in yield.
Mm-hmm.
So even though you're down 5,000, you would actually be up 4,000 and you wouldn't be down at all. Because you have 9,000 in yield, you're down $5,000, but you've made $9,000. So you're actually up in the profit margin, the plus or minus, by $4,000 because you have a hedge to the downside. If you put $10,000 in Knight at $1, I'm sorry, this yield would be cut in half because you're yielding at Knight. So this would be 4,500 in yield. So you would only be down $50. Sorry. That's it. This is with using like a Knight BNB, right? Because if Knight goes down, then your farm goes down. So does your yield because you're yielding Knight.
Mm-hmm.
You'd only be down $50 versus 5,000. It's a pretty effective hedge, if you ask me. Now, if Knight, you put 10 grand at $1 and Knight goes up to $2, right? That 10 grand is now 20 grand as your base capital. And if you've been making $100 a day, you've actually been making $200 a day times what, 90, which is 18 grand. So you're up to $38,000 in 3 months if Knight does a double up in price. So you're up $28,000 from your initial investment of 10. So this is the power of being in a DEX token and just accumulating and holding on and using it to yield other assets. And it's a hedge to the downside. So you don't freak out when price volatility starts to happen in things. And you can predictably multiply your money over a longer period of time if your belief is that things will go up and to the right over time. You have to have belief in whatever your asset, your macro belief is going to appreciate in value over time. Hopefully nobody's macro belief, is depreciating because you wouldn't want that to be your macro belief, right? You don't want to lose money. And that's what you're doing if you're just holding dollars in the bank with inflation. Like you don't see it happening, but it's happening. Your buying power from those dollars is slowly depreciating very quickly, probably like 15, 20% or more, measured by the right inflation markers. They measure it by some other shit to make it look not as bad, but it is not 8%. It is much higher than that. Okay. Does anybody have any questions about any
I
of
have a question actually. Okay,
Yeah,
so
go ahead.
looking at the pancake swap and how much X it did. So let's just say our Knight goes to $20 and we're in our 3rd year, right? And our goal is to double, like that's our goal. So 10, 20, so now it's at $40,000, but because it's 10X, it's at 100,000. So look at the macro conditions. Do we take 60 and reinvest it in a different crypto?
Oh, this is a whole nother.
And just keep the 40 in there because we're at where we wanted to be.
Yep. So you're talking about removing risk when you're ahead of schedule.
Yes.
Yeah. So this is a really valuable concept that is difficult to teach because it's literally different for every single person. You have to, so it starts with your solvable problem. Brandon, you teach the solvable problem, right?
Yeah, but we're not like in depth on it because I know that's Dan's proprietary stuff, but conceptually same approach.
Okay. Maybe I'm in CCA, so I'm sanctioned to teach more about it. So I can maybe teach more about it. Basically the solvable problem, and Brandon, like it's almost, if people are base casing and setting up longer plans, like you got to teach them the solvable problem because it's the anchor for everything, right? It helps you make decisions. You don't know if you're on track or ahead of schedule if you're not measuring where you are against what you really want in life, right? If there's no like set kind of parameters,
We do,
like what do we know?
talk about long-term goal and preferred time horizon.
Okay. Do you talk about like percentage, like on average per year?
Like what you would then need per year? Yeah.
Okay. Yeah. So that'll give you a little bit to measure against, but you won't know if you're ahead of schedule on your 10-year plan or whatever if you don't set the variables and be able to look at it and be like, hey, I only need 70% a year, but I'm up like 150. So at that point, I could take the overage and I can move it into something safe. Like I can move it into stables, and I could stake those stable coins on Nexo or the lending network that we just launched on NightSwap and get 10 to 12% a year, right? So I'm getting much less returns, but it's safe, right? More or less. We don't know. Stable coins are a bit of a interesting topic right now because of what just happened with UST, but that was a bit of a different situation than most stable coins. So my answer to that would be, if you are a risk averse person and you are afraid of losing that, then yeah, lock it in. If that's what you want to do, move it into something safer and lock it in. You can lock in your wins when you're ahead of schedule. That is a smart thing to do. I am not a smart person. I am an infinite games person. I have a very high risk tolerance. My life has been led in a rather reckless way. And I know that about myself. So I'm okay with these big swings. Like my portfolio swung several $1 million in that Guardian dip. And I didn't panic. I didn't waver, which is impressive. Even for myself, I was like, wow, why am I not like freaking out right now? This is weird. But it's because I know myself, and I told myself, hey, I have a belief. My macro belief is Guardian. I believe that it will trade at $40 one day. Probably pretty soon, but we don't have crystal balls. I do know some really cool things that are coming that I can't share with anybody, but good things for Guardian. I believe that at some point in the future, and I don't care when it happens, that Guardian will trade at $40. So if that is my macro belief, then I'm happy buying Guardian anywhere below $40. I have no fear of buying the top, right? Because my belief is it'll trade at $40, which is at least what is that, 7 right now? Like a 6x from here, or 5x, we'll call it 5x, right? I have a belief that anything I buy right now will 5x. I could care less if it goes back down to $2, if my belief is that it goes to 40. Now, creating what your macro belief is a difficult thing, and creating those kind of targets, you really have to pay attention and know what's going on and discern that for yourself. Don't use mine. Make your own opinions based off of your research. And that's where it pays to have a mentor like Brandon or myself or Mario or PD, Nick, some of these guys that will teach you how to think about things and look at things and teach you how to do the research. Once you know how to do the research, then you can do it on your own, right? So did that answer your question, Heidi?
Yes, it does. So basically
Okay.
touch base with Brandon and reevaluate where our goal is. And
yeah, there's nothing wrong with asking. I would just never rush into anything. Like the first thing that you're going to do is rush to close loops that you open. You're like, oh man, like once I do this, like, how do I do this? But you're probably jumping ahead of things, and you're not letting things sit and percolate and develop an exit strategy. Like once you're into things and you're set up, you should you should start thinking about an exit strategy one day of how you want to
Mhm.
how you want to move things around. And it's your responsibility to do that, because who knows what happens with crypto and guard and everything, right? You should be prepared.
Right.
That being said, you don't really understand or know if you're ahead of schedule if you don't have a solvable problem and you don't have anything to measure it against.
Mhm.
Heidi, you can message me and we can set up a quick session for next week if you want to talk through
Okay.
this.
And then I just have one more question too. I don't know if anyone else is struggling with the difference between a liquidity pool and a lending network. Like I thought our liquidity pool was kind of like a lending network.
It kind of is. Um, so this is always really challenging to explain to people is liquidity pools. When you provide liquidity, you have to provide the same amount of each asset into a pool, right? If you have guard and you have BUSD, in order to put $50 of BUSD into the liquidity pool, you have to attach $50 of guard to it and put them in together, right? And when you provide liquidity, that's what you're doing. In that pool, there is sitting, let's say $5,000 of guard and $5,000 of BUSD. Let's say somebody buys $100. Well, they're putting $100 of BUSD in to the pool, and they're taking 100, let's say guard's $1. They're taking 100 guard tokens out, right? So now there's in the pool, there is, fuck, what was my initial numbers? Brandon, help me.
I think you said 5,000 of each.
Yeah, five. Okay, so now there's 5,100 of BUSD and 4,900 of guard tokens. But because someone bought guard, the price went up. So the value of, even though there's less guard tokens in the pool, the value of those tokens is higher. So there's a constant. The liquidity pool is equaling a constant, right? So whenever things are pulled in and out, that constant has to remain the same. So it balances out the pool accordingly. That's where things get really complicated. And these are things that you really don't need to understand. So that's something else I'll warn you about crypto is you're going to want to understand all of the technical shit before you move into things, or just understand that you just need to know what buttons to click, what buttons to not click to make money. And then you can start to learn those things along the way as they come up in your experience. Because a lot of people missed out on guard because they were like, I don't get this farming shit. Right. And they're just like, I don't understand this at all. And it took them long to really kind of process it or go through the material and everything. And they just, you end up chasing that way. So something that Nick tells us all the time is like, you don't need to understand the tech in order to make money in crypto.
Got it. Thank you.
But if you do want to understand, there is plenty of resources to just kind of understand how a liquidity pool works. Just know that it's basically like an order book that's automated with a pool of liquidity assets. Okay.
Thank you.
And I want to be respectful of the time here. So what we'll do now is if you have additional questions for Daniel, we'll move over to the private session for Mastermind members. And I wanted to drop this in the chat as well before we do that. If anyone wants to chat with me about the Mastermind or apply to join the Mastermind, I just put the link there in the chat. Or if you just want to message me privately about it, I put my Facebook URL in there as well. Send me a friend request if we're not friends, and we can just private message back and forth. But we're going to move it to the private session now. And for those of you who want to learn a little bit more about NFTs specifically, ask Daniel questions. And we're going to talk about his NFT launch that's coming up here shortly as well.
If you're in the Mastermind, I recommend coming to this call.
Definitely. Yeah. If you've got time now, this is something that you're going to want to be a part of. So same link as we normally use, you'll find that in the Telegram announcements channel, and it's also on your primary resource doc. So we'll wrap it up here, and then we'll reconvene there in like 1 or 2 minutes. So thank you everyone for joining us. If you're not yet part of the Mastermind, we're glad to have you here, and keep watching Facebook, keep watching your email, because we'll have more sessions like this with special guests.
Let me just drop a link to the Forge YouTube.
Oh yeah,
we have a bunch of educational videos that break down solvable problem, the things I'm talking about. Go ahead and subscribe to that channel and watch the videos in order. They're labeled number 1, number 2, number 3, number 4. That will take you through a process and help you kind of understand. If you like the videos, give it a like and leave a comment, because that helps me help other people. We like that. Eric says those videos are a great resource. He has seen them. He knows.
Yeah, so I strongly encourage everyone, click that link now, because it's going to go away when I end the session. Click the link now, just open it up in your browser, and then you'll have it there. Like Daniel said, subscribe, and then you'll have that window open for future reference.
Yeah, and you can just search on YouTube, just search Forge Finance. If you lose the link, it should pop up. Black and orange logo. All right, I'll see you in the
Thanks, man.
the other
Awesome.
All right. Thanks, everyone.
Yeah, you're welcome, guys. Pleasure meeting you all. Have a nice day.